What's up, traders? Welcome to another section of the Greatness Forex Academy. Now, in this section, we're going to be making a breakdown on so many pairs. Why? Because I will call this section a break call. Now, why do I call it a break call? After this video, I'm not going to be uploading any more video to YouTube. Why? We at Greatness FS, we decided to go on a break to prepare for you all the goodies I'll be talking about. And once we are back, we won't still release the goodies until we hit 1,000 subscribers. So while we are off, you can invite your friends to subscribe and also join our Telegram channel, because that's where we'll be updating you almost every day. And those who are following us on Tradingview at Greatness FS, you'll also get our updates there. And those on our Facebook, our WhatsApp, and on our Instagram, you get updates as well. So now, since we are going on a break call, we're not going to be dropping videos anymore till we resume. So we don't have a fixed time for resumption until we are done with everything we are preparing for you to enjoy. And definitely we will be done before Christmas or after Christmas, which is December 25th. And for those following us on Tradingview, anytime we are analyzing, because we are still trading. We are still trading, just that we are preparing some things for you. So anytime we're analyzing, I will want to take trade and we'll see any good trade that's going to benefit you. We'll do as well to still drop it on our Tradingview, and those following us will be automatically notified on their email, just as YouTube notify you each time we publish a new video. So do well to follow us on Tradingview so as to get notified, because we might not make further videos for now, and you might not get update from us for now. But our admins are still very active. You can chat anyone and they will reply to you. But do know we are preparing some things for you. So we don't want to, not that we can't make the YouTube videos anymore, but we don't want to distract ourselves. So we just want to focus on the chat and prepare what we have for you to enjoy once we hit 1,000 subscribers. So in this video, we are just going to be making a breakdown of so many pairs. We're going to be analyzing as many pairs as we can. So I won't call it a weekly forex forecast. I'm just going to be analyzing as many pairs as I can within a space of 15 minutes till we finish the video. So without wasting much of your time, let's get straight into the chart. Sorry, this is Tradingview. Yeah, that's our channel, that's our Tradingview name. Let's get straight to the chart and start the analysis. So we are going to start from this first pair here down to anywhere we can start within a space of 15 minutes. So let's start from a USD card, and from USD card, let me delete this stuff out. Let me delete this. Sorry. Okay, deleted. Now what do we do? Let's move over to the monthly time frame and see what we are getting there. From the monthly time frame, what can you see? You can zoom off your chart if you want to draw trend lines. Let me delete this as well. This was when I was teaching. But if you don't want to draw trend lines and you want to use a normal method, we are using support and resistance. You can see that from this monthly time frame, what can you see here? Because personally, I like drawing my trend lines from a much lower time frame, like the 4 hour or the 1 hour. So what can you see here? This area is supposed to reject this market to the upside as what? As a support area, because if you look back, it's acting as resistance. But as you can see, the market is currently going down. It just broke below it. However, the month is not end yet. It's not month end yet, so we can't justify it with this candlestick. It can as well push to the upside and become a bullish candle with a wick, which is called a hammer, just the way this one closed. But since it's break below it, let's see what we are getting from the lower time frame. Okay, from this time frame, as you can see, it also broke below it. And what should you be expecting from this area? You should expect the market to get to this region and go for a retest before you short. Don't just short. We don't short from the lows or buy from the highs. Now if you go over to the daily time frame, what can you see? What is the scenario here? Let's not waste much time. Remember, we have 15 minutes to analyze. So what can you see here? The market is already going for a retest before the market close, which I know it's not a proper retest. So the market tends to come down to this area before it will go for a proper retest, and at that region, if the market is still in a bearish environment, you can start shorting your trade. And why so? From those who studied wave analysis, you can see after this long wave, there was an A wave, a corrective wave, which is the B wave, and this is C wave. After the C wave, the market is to continue where the uptrend, because it was coming to the upside before. As you can see, this is another correction before this move started, but let's not bother ourselves with the wave. It's somehow complicated, and that I can't explain to you now. But what you should expect from this present price action, because we don't look at the past that much except you want to draw trend lines. And if you want to draw trend lines, okay, let's say obvious peak and troughs. What can you see here? Can you see this trend line? Can you see this trend line? There was a touch here, and a touch here also. So the market can as well touch this area and start moving to the upside. Why? Because from the monthly time frame, the candle is not yet closed, and it's close to the structure, so it can as well close above the structure. So this we are going to be stopping our analysis on the daily time frame, because the 4-hour and 1-hour time frame are used for entry. If you see your entry rules, which you can see here already, you can see the trend line is being respected, and if you decide to draw another trend line here again, you will already know what is happening there. So let's move over to the next pair here, USDJPY. USDJPY, let's move over to the weekly time frame. From the weekly time frame, what can you see? Okay, the market, okay, excuse me, let me take a call. Okay, from this weekly time frame, as you can see, the market is currently rejecting this area, because it's tried to form a head and shoulder, and it didn't respect it. It decided to form an inverted head and shoulder. So the market seems rough, and as you can see, these lows here, this is a good point to long it if you were watching this trade. And as you can see, this candle close above it, and the market is on its way to the upside, though there is a structure above that can actually stop this market from moving to the upside. This is structure. So until this structure is broken, I won't call it a proper uptrend, though it's just from a double bottom, or let's say it just hit a lower low that is being rejected for several weeks, several months. If you move this back, this area has been respected for several times. So it's supposed to turn uptrend from this region, but from what I'm looking at, because of this structure, until that structure is broken, I will call it an uptrend, and you can see the rejection already. And from the daily time frame, it's giving a scenario that this structure will be broken. Why? Because it's trying to form a W formation, which is coming down to retest already. So once the W formation is retested, then expect the structure to be broken, which will now give you a scenario to long this trade. You can even start logging the trade at the neckline of the W formation if your entry rules are satisfied. The next pair on our watch list, sorry, not on our watch list, I'm looking at is a Euro NZD. Euro NZD, oh shit, we missed this trade. We missed this trade. Oh, are we taking the trade? No, shit, we missed this trade, man. We analyze this for a long opportunity if this trend line is broken and retested, because this is a corrective wave A, B, and wave C. Wave C is supposed to move to the upside, and as you can see, it's a falling wedge. And as you all know from a past YouTube video, that once you have a falling wedge like this, the market is supposed to move to the upside. As you can see, it broke and retested the trend line, and boom, it moved to the upside. So as you can see, this is very simple, very simple. So let's move over to the next pair, because we have only to analyze. Okay, you can see, why did you think gold has been rising and why it has been falling? Okay, let's just make use of trend lines here. Let's know. Okay, this is the reason it fell. It touched an obvious trend line. Remember, trend line, one matters are the touches. You can see, and the reason you see it rising again, it also touched an upward trend line. So don't forget, there are so many tools to analyze the market. So don't focus on support and resistance alone. Focus on the diagonal support and resistance, which is trend line as well. So what happened? It touched this downward trend line. That was the reason for the fall, and those who took the trade from the lower time frame made huge profits. And as well, immediately it touched the upward trend line again, it started moving to the upside, and this time you can expect it to break the upward trend line, sorry, the downward trend line, because it's currently moving up. So this is simple analysis. The market is currently rising. So let's check Ethereum and USD. This is a currency, this is a crypto. What's currently happening here? The market just broke a structure area, and what should you expect? You expect the market to move to the upside, retest it, and follow it to the upside. Very simple concept, impulse and correction. Very simple concept. And you can back up your analysis by going over to the higher time frames. As you can see, the market is currently impulsing, and it can as well disobey. This structure will go from the 4-hour time frame, sorry, the daily time frame, and come down to retest the one from the weekly time frame. Very simple. So never focus on one time frame alone. Always back your analysis from higher time frame. So let's check for AUD/CHF. AUD/CHF, what can you see? Going over to the weekly time frame, AUD/CHF is currently in a high that has been rejected several times, and you should expect a push to the downside, which you already see happening. Don't worry about these many zones. Don't worry about them. Just focus on what I'm saying. And if you go over to the daily time frame, what can you see here? That area is already rejecting it, and the market is currently in a rally, which I will call a wedge myself. If it's broken and retested, then you can take a shot to at least this region, or wherever you decide to take your trade for at least a 1 to 3 risk to reward. Next pair is AUD/JPY, AUD/JPY or network. Okay, AUD/JPY, going over to the weekly time frame, as you can see already, we expect the market to come and retest this area before it push to the upside, because it's currently in a high that has been rejected several times. So this is a reversal. Anytime you hear me say high, know that I'm talking about reversal trade, because we don't buy from the high or sell from the lows. So as you can see, this is a reversal. There's no trend continuation. And if you go over to the daily time frame, where should you be looking for a good trade? And as well, just like AUD/CHF, this is currently in a rally, and taking the trend line, you can as well say if this trend line is broken, I'll take my trade, and if it is respected, I will know it's not longer a valid trade. This one that hit us at break even, what can you see from here? From the daily perspective, you can see a W formation is about to be formed, or it's formed already, and overextended W formation, and a retest of this zone and a close above it will give you scenarios to start looking for your entry from the lower time frame. And going to the weekly time frame, okay, it's close to the structural level which your take profit might battle with, so you have to wait for all your all odds to be in your favor for you to take trades. For AUD card, we expect a push to the downside, as we have been analyzing this last week from the weekly time frame, and as you can see, we can get a 1 to 50 risk to reward here, but we left the trade already with a 1 to 4.66 risk to reward. This trade we have been analyzing for past weeks now that it should fall. As you can see, this fall is going to be massive, so I will expect you to start watching this as well. You can put it in your watch list for this coming week, and once this structure is retested and you see an entry, you can take your trade. For GBP/JPY, this also hit take profit, and from the weekly time frame, what can we see? Okay, it's currently positive to the upside, and this is a structure here. It might take 1 week candle to get there, so you can take advantage of that 1 week candle, wait for a pullback at this region, and shoot your shot. AUD/NZD that hit our take profit as well. The same scenario, you're gonna wait for a pullback and shoot your shot. It's almost 15 minutes, so let me just quickly add one more. Euro/USD in seconds you must have analyzed. Euro/USD double top was formed, and from the weekly time frame you can see it's supposed to short to the downside. From the daily, it's trying to form an inverted head and shoulder pattern, which you can see here, trying to form an inverted head and shoulder pattern, which is 1, 2. Also, just check it yourself. see, this is the head, this is the shoulder. So this should be an opportunity to short if your entry rules are satisfied. So this is us for now.